These are 5 numbers every trader should watch like a hawk. Most traders look at price, but price alone doesn't tell the story. It's like judging a movie by one frame. The real picture comes from numbers working behind the scenes. Here are a few, or actually 5 key metrics every smart trader should keep an eye on and why they matter. But before we get into it, my name is Tim. I'm the founder of Archaide Automated Trading, and we're actually going to go into this platform a little later on. But number one, the first most important metric, arguably, is win rate. This is how often you are right. This tells you how many of your trades end in profit. But here's the twist. Best traders don't always have the highest win rate. For example, Warren Buffett trades few times, right? And you think that, every single time he trades, it's going to be a winner. It's actually not the case. But when he wins big, right? His bets takes very few of them, but they're huge, huge wins. And that's really where the second thing comes in, right? Which is profit factor, which is how much you make versus how much you lose. Okay. This number shows literally a ratio between how many dollars you earn for how many dollars you lose. So, for example, a profit factor of 2 means you are crushing it, right? You're making $2 for every $1 you lose. This is almost like your trading efficiency, okay? Third, max drawdown. This is how deep you fall before you rise back up again. Basically, your biggest loser, right? So, even the best traders lose sometimes, okay? Max drawdown tells you the biggest dip in your account before you actually recover it. Keeping it small is smart, broadly speaking, right? You want to keep a small max drawdown. It reduces risk. Number 4, your total P&L. This is your bottom line, basically your scorecard. This is how much your strategy made or lost overall. But this really doesn't mean that much if you're taking massive risk, okay? So if you have a huge drawdown and you're taking on massive losses, you don't want to, be super happy that you're making money, right? Because at any point in time, you may need to pull that cash out, and you might be in a liquidity crunch, okay? So number 5, and last but not least, you want to take these 4 metrics I mentioned earlier and compare them to a benchmark, okay? So if you're trading equities, you want to compare your growth to the S&P 500, right? And then also if you're trading a strategy, or let's say you're trading Apple, you're trading Apple with the SMA, you want to compare how your strategy did compared to the underlying asset, okay? These are what, this is really what separates the men from the boys when it comes to trading, okay? So now I want to show you Archaide here, right? We offer, right, in our backtesting and also in our performance tab, the total trades you take, the win rate that you received, the P&L, the profit factor, and max drawdown. These are obviously key metrics. This is why we put them in there, okay? And you can see the entire trade history, right, over the course of the last year. Again, you could adjust this. You could put NVIDIA, you could put Tesla, you could put Bitcoin, whatever you want to back test. You could and search up any ticker, right, with over any look back period and position size. And so you have all that data, right, all that great data right here at your fingertips. Okay, you have the entire trade history right here, right? And again, so you have these core metrics, but again, you want to connect it back to a benchmark, right? So the underlying stock here is Apple, right? So we want to look at the past year, and you can see over the past year, Apple has been up 14.23%, right? So we're going to benchmark off this 14.23%, right? So as you can see, we made $44, right? We have 10 shares of Apple. We're going to back into the P&L. If we have 10 shares, that means we had $2,570 worth approximately. Yeah, right about $2,250 worth of Apple. And so that means with over $2,000 worth of Apple, we made 44 bucks. We're not beating the profitability of just buying and holding Apple, which means we should be concerned, right? We may not want to use this strategy, so to speak, right? Likewise, let's look at the max drawdown here. Max drawdown, if we use this strategy, is 1.79%, which is pretty low, right? Again, if you were to have bought and hold Apple, your max drawdown would be 33%, right? So again, sure, you made 14%, but at one point in time, you're probably, crying yourself to sleep because your portfolio was down, or this particular stock was down 33% from the highs. And so you might, not everyone is built. It's easy to say, without actually having a vested interest in this company, that you would buy and hold and just, have diamond hands, if you will. But being down 33% does not feel good. I can tell you that from experience. Okay. So that's the first thing, right? So you have less risk using this strategy, but you're also making far less money. Okay. Now, compared to the overarching, this is the S&P 500, compared to the overarching index, even Apple, buying and holding Apple has not been as good as just buying and holding the index for the last, year, right? Likewise, if we look at the max drawdown here, you're down only 18% is your biggest dip. Okay. So looks like in this case, it might just be smarter to hold the index, right? At least over this time frame, right? Now, again, you could look for different, indicators. Different tickers, different strategies to actually outperform. But this is just the basics, right? And hopefully, with all this being said, right, I kind of want to put it simply here, right? The great traders don't obsess over every single number. They focus on a few that tell the truth. The story is about being, or isn't about being right every time. It's about making your wins bigger than your losses and learning what the numbers reveal. Okay. So hopefully that was helpful to you. If you have any questions, feel free to let me know in the comments below. And again, subscribe. I love you. Okay. Bye.